For example, when Spotify came around, it was all out war. Right. Because that was the alternative to Pirate Bay. But then what are you going to do? Pirate Bay? Yeah, they don't care. Right. And they lost the last.
For everything. It's good for the users. I think it also proves that we've got into the real digital age, right? Where before these models would not have worked because there were just not enough users on it, and not enough paid users.
Well, not only that, tokens for everybody. Every company was giving tokens, left, right, and center. Now everything is being brought back, but that's after all the quarterly reports.
Yeah, and I imagine, but see, that's the thing is because there's no way to differentiate a token that was minted for promotion or a token that was purchased directly, right?
No, exactly.
The AI doesn't know different. It just knows it's using a token, and that's what these guys are doing. Is they're just ingesting all the tokens and giving it all equal value on those.
But imagine all of the sudden, the legal guy goes in, sir, we have to go all in on this motherfucker.
You're gonna miss out
because he's feeling the FOMO. Welcome to the From the Future. Manny Hernandez and Carlos Art Nevares. Carlos, my man, say what's up.
What's up, Manny?
Each week we cut through the noise on technology, AI, crypto, the financial markets, and the signals most people miss until it's too late. In today's show, we're talking about how Spotify and Universal Music struck a deal allowing fan-made AI covers and remixes. VCs and founders use inflated annual recurring revenues to crown AI startups. SpaceX IPO is here and everyone is going crazy about it. The SEC has approved Nasdaq to list Bitcoin index options on the exchange, and experts warns that AI agents with crypto will escape and become unstoppable. Tokenized stocks risk liquidity and revenue fragmentation, according to new research, and David Hoffman from Bankless sold all his Ethereum bag, and our very own friend of the show, Gabriel Haynes, it's absolutely losing it. We'll break down what the headline says, what it actually means, and why it matters for your future. No hype, no fluff, just clear signals from the future. So smash them likes, subscribe to the channel, and let's get into it. Carlos, my man, did you know that Spotify and Universal struck a music deal that allows these fan-made AI covers and remixes to be pretty much legal?
Well, of course it should be legal.
Well, the thing is, for example, what they're saying is, I'm not sure if you're familiar. Or have you seen, for example, 50 Cent on Soul, right? They changed the genre, same lyrics, same music, same even voice and artist, just the genre changes, and it sounds amazing, right?
I've been listening to Beatles in reggae.
There you go. Oh, bro, amazing reggae stuff. I actually hear a lot of the Bible in AI music. It's amazing too, reggae music. So, that's the thing.
They mixed rock and roll and cumbias, and that was
that's
hot.
See, that's the thing. So AI music is one of those areas that everybody agrees will be a thing. It's one of those things that humans do like, right? We may not like other things about AI, but we do like the music. So it looks like Suno and Spotify, let me show this right here, announced a partnership with Universal Music Group to allow fans to use this generative AI technology to create covers and remixes of their favorite songs. So I'm pretty sure they already figured out how to monetize it. because that's the main thing. You're using
Yeah.
50 Cent's likeness and his voice and his lyrics, but all of a sudden, just because you're producing a new genre with AI, who's gonna keep that revenue? That's the main thing.
Right.
The company did not share pricing or a launch date or for the new tool, but it looks like they're gonna have this Spotify Premium, and allow revenue share with participating artists. So this is the first movers right here. So the way I see it is like Spotify would allow, instead of demonetizing, it will incentivize it, will split the revenue with the original artists, 50 Cents, the Beatles, or whoever, the labels, really, Sony, right? Universal Music. And then whoever is doing the production also gets a cut. What surprised me is that for the first time, I see the music industry being pretty much the first to embrace a technology that otherwise is looked upon or look as a technology that steals from you. For example, when Spotify came around, it was all out war.
Yeah, right.
Because that was the alternative to Pirate Bay. But then what are you gonna do? Pirate Bay? Yeah, they don't care, right? And they lost the lawsuit against them. They couldn't take them down at the end, even with all their money. So
and I think that with services like Spotify, where they are already monetizing, right? I think there was a point at which Spotify was mostly free, but there's
they monetize the playlist.
Free users anymore.
So the way it works could have changed by now, but in the original way is that all the music is free.
Yeah.
But then and you can categorize it, genres, and you got what you like, right? For example, I like a couple of bachata, I like some merengue, some reggaeton, gospel, right? So you create your playlist of what you like, and then the subscription, that's what you're paying your playlist. The moment you stop paying the subscription, play your playlist, and also make your playlist public, make it available to others, depending on how many streams you now can even make money. Depending on how many, the playlist becomes the curators. If you're a new artist, you want your music to get into certain playlists, and so the playlist, so to speak. So that's why for them it's beautiful, because if you can create playlists around fan-made AI-generated music and not violate the copyright, that's why they need the association with Universal, right? Don't break. Then that to make music. To me, the surprise was usually the labels, they want it all for them. I guess that they learned our independent media, independent artists, and independent music. So I guess that now they're stepping up front, and before anybody else does it, we're gonna go ahead and allow, right, this type of music. So it's great for them.
I think it's great for everything. It's good for the users. I think it also proves that we've got into the real digital age, right? Where before these models would not have worked because there were just not enough users on it, and not enough paid users.
Well, not only that, this is one of the real core uses of AI, right? This is one of those use cases that is undisputed. It's great. You can produce music. You can produce great lyrics. You can even generate personalized songs for you about your relationship with your girl, right? And all of these things that have always been a major money maker. For example, I remember in the 90s, in the beginning of the internet, they were selling you, like, you could say, when email was like an innovation, right? To sell a personalized e-letter, right? With a little animation, a personalized love letter. I remember being websites that will generate this automatically for you and send it via email, and then the girl will be like, "Oh, I got an email from him," right? Now it's like, what, you're sending me spam, motherfucker? Like, what are you doing? But back then, right? So now it's the same thing with AI. Oh, you're making a song about our relationship, right? Because not everybody can.
But now they actually criticize. They actually criticize. Now,
Well,
now you send them, and it's not good enough anymore. Not
well,
everybody can do that.
well, but since Eva has been, remember in the garden, they had it all. This just wasn't enough, right? They had it all.
That's
It just
human
wasn't
nature.
enough. So she had to take the fruit. But I digress. It is what it is. The good part is that the labels are taking a forefront and nobody's going to get in trouble. Fans can continue to make this amazing music. We can continue to enjoy it and everybody can make money. It's about to lose a lot of money, if you ask me, are the VCs, because in this bubble, they have been just inflating annual recurring revenues to crown these AI startups, and the bubble at some point is going to pop. Last month, Scott Stevenson, co-founder and CEO of the legal AI startup Spellbook, took to X in an effort to expose what he calls a huge scam. Among AI startups, inflation of revenue figures that they announce publicly. The reason many AI startups are crushing revenue records is because they're using a dishonest metric. The biggest funds in the world are supporting these misleading journalists and PR coverage, he wrote on his tweet. So basically, token max, and everybody's being subsidized.
Yes.
And they are counting that user as a real user, paying real amounts. So you think I'm in a $20 subscription, but I'm spending all the subsidized tokens. So that's the figure I'm guessing they're using, which is that will inflate. And now with everybody, that's why the tokens for everybody. Every company was giving tokens,
right.
Left, right, and center. Now everything is being brought back, but that's after all the quarterly reports.
Well,
right?
Yeah, and I imagine, but see that's the thing is because they don't. There's no way to differentiate a token that was minted for promotion or a token that was purchased directly, right?
No, exactly.
The AI doesn't know the difference. It just knows it's using a token, and that's what these guys are doing is they're just ingesting all the tokens and giving it all equal value on the books,
and then that's our annual recurring revenue, because that's what everybody's supposed to be paying. But they're forgetting that everybody's in high on the free samples.
Well, and honestly, the way to solve that is look at net income, right? Not annualized revenue. Right.
Yeah, well, that what they're reporting.
They have to discount the tokens they get used for marketing.
Exactly. Well, let me look here. It says the main obfuscation tactic says that basically they're substituting contracted annual recurring revenue, sometimes refers to committed. So basically, it's committed annual recurring revenue. Same thing we're speaking about. They're assuming commitments as already revenue.
Correct.
And that's not real revenue, but the people are not spending that. The metric is established and trusted since the cloud era to indicate total sales of products where usage and therefore payments is metered out over time, which is also the same thing. Actually, I should have this view, but it's also the same thing that happened on cloud. On cloud is the same bait. They're trying to emulate that. You get on AWS, they get you hooked up with the really cheap stuff and tooling in the front end, and then once your usage spike on the back, they get you with the bill. When you look around, you have a $30,000 bill, and it's because they got you on the usage, which
Correct.
is the same thing. They get you in with a little $200 or $20 subsidized package, right? And then they get you hooked up. Now they're trying to switch it where you got your API usage, and then you got your subscription usage, and depending on how you log in, right? But all I see that is just as a transition. They're trying to get people accustomed to dual billing, and then do a transition just to token billing and nothing else, because that's how it will eventually. But once they go to full token billing and they start charging what this truly is worth, and don't get me wrong, it might still be worth it, but the problem is that a lot of companies will start looking more into token optimization, right?
Yes.
How
Yes.
much were you able to get? How much production were you able to get out per token consumed? So production per token.
Yes.
Because the thing that really has to stop here is everybody in your company trying to prompt a one shot many little apps that don't end up being used in any way. It might look cool the day he makes them, but doesn't have any real usage on the day-to-day, therefore no impact on productivity.
And
that's
how many tokens are being used for real for real value, right?
Yep.
Versus personal use, things like that.
Yeah, for real production. But it is what it is. We'll see what happens. In other news, the SpaceX IPO, it's here, man, and this is like nothing I have ever seen before. From the S1 release to how they launch. Look at this. These guys created 4,400 millionaires in just a single day. 400 of them are worth now over 100 million. These are NBCs. These are SpaceX employees. The list includes welders, technicians, cafeteria staff. Because of 2 decades, the company paid them every level of the workforce in stock instead of higher salaries. Juan Hernandez, for example, migrated from Mexico, took a $28 an hour contractor welding job in 2015, and now the company gave him over $10,000 in an equity grant that lets him buy more shares and allow him to even buy more shares, right? So now the stake is over $880,000.
Wow.
This is the stuff we like to see about if the company is going to be profitable or not. This is their IPO moment. These have a long way to go before that bubble is going to burst, and it's going to burst. Eventually, they're going to show up that they cannot make it to the moon. They can't make it to Mars because good luck getting there. The fuel calculation, in my opinion, alone makes it an impossibility with current fuel sources. Tomorrow, somebody can come up with a new way to propel yourself without air, which is what people don't understand. Supposedly on open space, there is no air. So you cannot push yourself against nothing. There's nothing for you to swim on.
Right.
So the way one thing is getting you off into orbit. Another thing is while you're in orbit. Good luck with that, right? So, but then he can continue to do test, and every test is amazing. I don't know if you saw that thing, man, but I have it here. And bro, check this out.
9, 8, 7, 6, 5, 4.
What other company
3,
can do
ignition.
this the day they launch?
We have liftoff.
Look at how many angles of cameras. To me, they spend more money on the production, making sure they were able to capture every moment to make it look amazing. Because they're launching a company, right? Into the moon. This is insane. I mean,
how
bring down
cool
the
is
volume
that?
a little bit. That's insane, right? So, of course, the company has a long way to go.
Wait, isn't the world square?
A CGI, man. CGI.
CGI. I see.
There you go.
Successful.
How many cuts between?
Staging separation.
That's a cut. That's a supposedly
We're not seeing as many
view
booster
from
engines ignite
the
as we expected
ship.
for boost back. but we are
Yeah.
seeing 6 good engines lit on ship. It looks like we just had an early boost
But,
back shutdown.
The thing
Again,
is,
a reminder, the booster
let me bring it forward, then it comes back, right? So, but look at how many angles. So you're gonna tell me that you were able to get a camera in there, protected from the heat, just to get the angle. It's a show. It's a show. Look at that. Look at that. It's a show. That's all I see. Is they wanted you to feel a certain way. They wanted you to feel that FOMO,
Yeah, yes, yeah, sure.
right? And that FOMO is what makes everybody rush. Like, bro, they wanted even the lawyers to feel the FOMO.
Yeah, of course.
Don't build, bro. Check this out. Check this out. This is insane. This is the S1. This is a document that is meant to be boring about financials and the status and all the contracts and all the bullshit,
They put a
right?
picture in it.
Bro, the first thing you see there is a freaking picture of a rocket. Look at this. They want even the paralegals. So they're used
Yeah,
to look at shit
marketing to the legal system.
to the paralegals. Because imagine this, and I thought about this. I'm looking at this and I'm like, so the way it works is very simple. I'm a VC of a big fund, and I need to follow the book, the bylaws, right? What the board says. I need to make sure I follow I do the due diligence. And all of that is this. I like a company, I like something, I want to invest in. What happens? I give it to my lawyers. That's all I'm gonna do. That's what everybody does. Give it to the legal team. The legal team will tell me, will uncover, will find the risk, tell me if it's, and usually what happens is this: whatever company they want to invest, the legal team comes back and they gave the pros, but then they say the cons and all the risk. And sir, you should not invest more than 1% on this. It's too much risk if this were to happen or that way. Their financials, look at their financials, sir, right? And they're like cock blockers. Here you are, you want to invest, and you're like, oh shit, I wanted to put 100 million. Now I gotta do only 10. But imagine that's usually the relationship with your legal, and you're used to this banter. But imagine all of the sudden, the legal guy goes in, sir, we have to go all in on this motherfucker.
You're gonna miss out
because he's feeling the FOMO. He's feeling the same FOMO that the VC is usually feeling. But now the paralegal is feeling it because he went through this S1. He went through this shit. And it's like, oh my God, we're going to the moon. We're going to Mars. Look at this. I'm supposed to be reading. No, I'm just watching pictures of this motherfucker being catch against the sunshine. We got to invest on this company. What other company have ever done this before, sir? We got to invest all in. You wanted to do a what? 100 million? Let's do 200 million. That's the level that these guys went. What I don't like, if I am on, the show, but what I honestly don't like is all the exceptions. All the exceptions for a massive retail allocation, no waiting period on the Nasdaq, the Russell Fast Track, the S&P 500 is gonna get it listed in less than 30 days. Something that they literally, every index fund adjusted their rules just so that they can buy. So the question is, if all of these motherfuckers buy now, who's gonna buy later? Because everybody already bought. Everybody's in. If everybody's in, because usually you got IPO moment, you got a lot of private funds, family funds, right? Angels, gamblers, the DeGens, they go all in. But institutional, the pensions, the firefighters, and the New York Police pension fund, no. And that's usually our exit liquidity. By the time they get in is when, the IPO moment is when the VC offloads into the traders, right?
Right.
And then when the pensions come in and the index and the Vanguard come in is when those gamblers those traders get to offload into them, and by then it becomes a boring investment.
Yes.
Volatility drops because you are already covering the full extent of the market.
Mm-hmm.
But if you do that on day one, within 30 days of IPO, you already cover the full extent of the market. Who are we going to offload to the Martians? We're going to wait until we get to Mars. We're going to find a new civilization there, and we're going to sell it to them. Makes no sense, man.
Well, I think from a market perspective, you are correct. That I think that they went very hard at removing volatility.
Well,
but volatility is good.
But they're making it more volatile because eventually, everybody's going to sell. And then it's going to crash.
Yeah.
The moment the cat is out of the bag, it shows that, if he's able to get to the moon, which he should be able to get to the moon, that will be the peak. That will make, everybody, he made it to the moon, right? So everybody will think if he made it to the moon, he's going to make it to Mars.
Oh, I thought maybe you were going to say that Neil Armstrong was for real.
Well, no, that wasn't for real. No, that wasn't for real. That wasn't for real, and that's proven. That wasn't for real. Have you seen the footage?
I have.
There you go. You have to look at the footage 2 seconds to realize that's fake. And if they had to fake it, it's because they didn't go. If they went, they wouldn't have to fake it. To me, it's very simple. I don't complicate it. I don't need to go deeper. I don't need to. Yeah, that's it. If you really went, you didn't have to fake it. But the fact that you faked it is because you didn't go. And I understand the reason why they needed to it's a bluff. It's a bluff. You're showing off that you have the technology that you cannot even imagine. And since they were also trying to make it and they were able to do it, we're not able to get off the ground pretty much. So, of course, and it worked. Got it. Good. We won. But can we stop trying to tell me that we went? It's over. It's over. Right?
Yes.
It's safe. We can say we bluffed. It's safe to say we were bluffing. At some point in the poker game, it's safe to look, bro.
Yeah.
I was bluffing.
Yeah.
You even laughed. I was bluffing, motherfucker. Got you with my bluff. Boom. That's it. Everybody laughs. We move on. The problem is that they still want to say, no, it was real. But either way, I digress. The thing is that eventually that's gonna burst. We don't know when, but for now, everybody's high on the hype. Kudos for them, right? Everybody's loving it, and whether you're shorting or longing, have fun with the current volatility. And a company that is not yet on the market and is already facing volatility, if you ask me, it's Anthropic, because they went out to talk about these mythos that
Fable.
they're so powerful. No, mythos. So powerful that you cannot even we cannot even release it to you, making everybody, oh wow, really?
I want it.
It's marketing. It's all marketing, right?
I want it.
So now they release Fable, and then Fable is amazing, but government officials don't know shit. So here's what really happens: these companies or these models, they really excel on coding. It's all about coding.
Yes.
So you cannot make a model be great at coding and then say, but please don't code. Because that's what they did with Fable. They could grab Mythos that is amazing at coding, and then they decided to put guardrails around it that prevented it from coding. But if you train a model to code, pretty much impossible for you to put a fence around it. So this is, in a nutshell, what really happened. They released Fable, and within 3 days, somebody had already broken into it. They jailbroke it. But then you ask, but how did they jailbreak it? Very simple. Very simple. The guy gave it a piece of code to Fable, right? Here's this piece of code. Please analyze it for security holes, security issues. I want to know if there is any security issue in this code. And Fable was like, no, I cannot do that. I'm prevented from helping you find security holes into code. And the hacker was like, I don't need you to find the security issue. I just need you to fix it. And Fable was like, of course, sir, let me fix that issue right away. But
I am allowed to fix it for you. I'm just not allowed to look for it.
But how do you fix
exactly
something without? How do you fix a security hole without looking for the security hole?
Yes.
Right. So Fable went on to look for the security hole, identify the security hole, analyze, right, and you get to see all the analysis, analyze everything, and then fix it. And he fixed it. But then now the hacker knows how to get in, because through the process of fixing, you show all the vulnerabilities that all you have to do is compare both codes. And
yes.
That's it. And now you know. So that was really, but then the reality is, how do you fix that? How do you guard rail from that? How do you tell AI, don't code?
Don't solve a problem. Yeah, don't solve a problem.
That's the reason. It's like, this is the problem they have. You sell a knife to cut onions. She can go and stab somebody too. At the end of the day, it's not your responsibility what the user does with it. It's the user's responsibility what he does with it. That's how we have to start looking at these things, no?
I think so.
Because otherwise...
So I'm thinking that, again, I mentioned to you that when you're looking at how do you do multi-agent tasks, is that the problem is that when you have a single agent on anything, it doesn't know what it doesn't know, just like a human, right? And you can tell it, don't do this, don't do that, don't do that. So, okay. But they're still designed to solve a problem. And so you bring them a problem they can solve by not doing what you told them not to do, even if it results in nullifying what you were told not to do. They don't know what they don't know. So they're gonna go pursue it. And that's ultimately where these guys have to figure out that if you're building a coding system, it's going to code, like you said. There's no way around it.
And then what we need is proper regulation that prevents that is harsh, the same way we do with a knife. You can go buy the knife. You can go cut onions, do whatever you want with that knife. But if you stab somebody with that knife, we're going to throw you in jail forever. And since these models are able to track who is using the model, all they have to do is actually become a snitch. Oh, I saw this motherfucker breaking a law, right? And they're gonna turn you in, and what's gonna happen is like harsh KYC will take place before you can use the bigger model. Depending on the model you want to use, is the level of KYC. Because if you want to use something like Fable, we need to know who you are and how you're using it. If you're using it for cutting onions, for things that are fine, good. The moment you start using it to stab people, to start to hack, since we cannot prevent the system from doing it, we're going to ban your account and report you to law enforcement. And from there, it's up to them what they want to do with you. No?
Agreed.
That's why
it's a secondary system of control.
That will be the only solution, but the solution is not preventing people from using, or only citizens. What is that? How you even good luck checking a private company checking citizenship? Good luck.
In the AI in the back end, checking API tokens. To make
the
sure
same
they
AI they're not allowed to use. Checking if they can. Oh man, that's gonna be a fun one. That's gonna be a fun one.
show me your
But-
passport with your tokens.
Yeah, but this podcast is brought to you by Voice Sales Flow AI. Right now, while you're listening to this, someone is on your website. They have a question. Do you ship to Canada? Is this in stock? Can I talk to someone? And what happens? Nothing, because it's 3 a.m. or it's a Sunday or your team is busy, so they leave. They go to your competitor and you never knew they were even there. But Voice Sales Flow fixes this. It's an AI voice agent that drops onto your website with one copy and spaced snippet. It talks to your visitors in a real human voice. It answers products and questions. It qualifies leads, capture email, phones automatically. It trains on your documents and URLs in minutes, and it never sleeps. Stop letting leads disappear into the void. Go to voicesalesflow.app today and start your free trial, voicesalesflow.app. The link is in the description. My man, did you know that the SEC just allowed the Nasdaq to list Bitcoin index options on their exchange?
Wow.
So we're hoping for liquidity here. The crypto market has been in a brutal bear market downside for the last year or so, expected going as planned according to the cycles. But we are looking for those initial good news that will start to bring the rally back up. This will definitely be one of those things that help a lot. Anything that brings liquidity into Bitcoin is great, and the Securities and Exchange Commission has approved the Nasdaq proposal to list cash-settled Bitcoin index options on the Philadelphia Stock Exchange. These options are European-style contracts tied to the Nasdaq Bitcoin Index, a benchmark that tracks 1/100th of the CME CF Bitcoin Real-Time Index. So basically, these trackers are tracking the price. The contracts are cash-settled. So what this actually gives is Bitcoin more utility. You get exposure to utility to Bitcoin, but and the volatility of the price, but everything is settled on cash. Soon, I'm pretty sure they're gonna start settling these on stable coins. What do you think?
Well, so I'm confused. How do you create an option contract on Bitcoin? Do you stake it, or like
they
I
have
own some Bitcoin? I can offer an option.
Not
on my
even
Bitcoin?
that, bro. This is what pisses me off. Not even that, because it's not like the Nasdaq has all that Bitcoin backed. It's an
That's
option.
what I'm saying.
It's
That's an option.
option.
So,
but it's cash settled right there. So it's an option that settles in cash. All I need as Nasdaq, the entity on top, all I need to have is the cash to pay. But the price that I track is the price of Bitcoin. And I liquidate you, which is, that's why the moment I'm reading cash settle, I'm like, oh, my heart on goes like, oh, what the fuck? And it's cash settle. So it allows, but this is one of those tricks, paper contract type of assets. It's a security. That's why the SEC has to allow it, because it's a contract. It's an option contract that settles in cash, and it's just tracking the price of Bitcoin. That's it.
Well,
and based on that price action,
how's that different from Polymarket? Like I'm just.
That's why it's regulated. It's regulated.
Well, that's the only difference. It's regulated, but okay.
But there are several small funds and family funds that, by their bylaws, they cannot touch things like Polymarket, for example. They cannot touch even Bitcoin. They cannot touch Ethereum. In several, they need to go through proper. That's why the ETF even is so important because
Right.
they cannot go to crypto directly. They go to crypto through the ETF, and that's how they get exposure. This is just another way to get exposure, but on options and not futures, not spot, options, right?
Yes.
And you know how they expire and all that. You know, all the framework of how options work is what gives the product some value in the eyes of gamblers, traders, right? I call
Right.
them gamblers because, bro, you know, you're every day here trying to predict if it's going to go up or down. It's like, is it going to be 13 or 32 in the roulette? I'm trying to
Right.
predict as well. I'm gambling. Yes, we have. Everybody has a strategy. I
just
understand
do
that.
poly markets. As soon as I saw that, I'm like,
The same thing. But we'll see where it takes us. But you know, to me, it's more advancement. You know, more solidifying even more the foundations of the crypto industry, which is always good. Now, some experts are warning that AI agents with crypto could escape and become unstoppable. Autonomous AI and crypto could have a far-reaching consequences for users and the financial system, says the IC3 researchers. Artificial intelligence agents have autonomous access to crypto wallets could become unstoppable if deployed maliciously or if they escape from sandboxes. Experts from leading academic research consortium warned that they pose a clear threat if deployed to persist them automatically, access to digital assets, persistence. But what do they think they can do? When combined, you know, well, they can act as an individual, so to speak, right? Start emulating humans. They could become scammers. That's the thing.
I mean, really, the we talked about that scenario from that book, right? I guess they could now start creating their own companies and taking a slice off of each wallet that they're managing.
Yeah, many things. For example, here says that AI-powered trading systems could enable collusion between autonomous agents and create unfair insider advantage. Basically saying, well, that's exactly what I'm saying. They're going to create a pump and dump group of AI agents only. They get all into a secret group, and they said, let's pump this token. And they pump it, and the humans chase it, or even other agents chase it, and then they dump it and make the money. And then it's so predictable.
Yes.
That's why it's illegal. Humans don't do it. It's illegal. But how do you throw an AI agent to jail? How do you kill it? So it's not to a human. You can say, well, if we catch you, we're gonna throw you in jail. And for us humans, let me not do that. Although the government and Donald Trump and everybody else is doing it. But I'm not gonna do it because I'm afraid, Mr. Government. And then, all right, how do you do that with agents? How do you tell an agent, I'm gonna unplug you? I already replicated myself into 3 different clouds. Good luck.
Right.
It is what it is. We'll see.
We are approaching those days, right? And I mean, what's the option? People aren't going to give up AI.
No, yeah. Well, we already as human race, for good or for bad, whatever happens is gonna happen. We're gonna see it. Hopefully, it's not gonna be that bad as some people predict. We'll see. In other news, the U.S. Securities and Exchange Commissions have moved to allow third parties to list tokenized stocks. And research is saying that this could risk 2 structural disruptions with liquidity and revenue fragmentation, according to Tiger Research. Basically, traditional finance views the breakup as because right now it's consolidated. Everything is going through clearing houses, right? All the liquidity on stock is very centralized, so you can get a fair price. The moment you decentralize that and tokenize it, and then you have liquidity pairs taking place in many places, they say this is going to cause price discrepancies. And on paper, that's true. But what they don't understand is that the crypto market is already full with DeGens like me and many others who love arbitrage opportunities. And they already have amazing technology in place that are chasing these arbitrage opportunities all day long and filling in. And that's one way to allow the little guys to monetize in an industry otherwise controlled by those same centralized powers. So although that on paper it looks like there could be a huge liquidity fragmentation, in the practice there is not. On the big companies, if you start tokenizing very little startups that are not yet ready, so to speak, the penny stocks, those will face liquidity fragmentation, but then the volatility even higher, even better. The bigger the risk, the bigger the opportunity. That's how I see it.
And with the tokenization, you get faster trading, faster access to the
and the stocks are mine, man. They say that's the thing. When I buy a stock on Vanguard, Robinhood, or this or that, I don't have the stock. I have the promise by a company that I don't own shit. That's the reality. When I own a tokenized stock, it's mine. And if I have to travel, if I need to leave the country tomorrow, and if I don't have to speak with that seller ever again, it doesn't matter. It's a tokenized stock. I have it with me in my wallet. Goes with me everywhere I go.
That's right.
And a certainty on that portfolio. If I have an Apple stock, a Coca-Cola stock, whatever type of stock, it's mine. It's not in a clearinghouse hoping some big fat corrupt guy actually puts it on a ledger.
That's right.
Trusting that he put it on a ledger. That's it.
Yes.
Put it on a ledger. That's it. Now this belongs to money. Good luck trying to get the stock, really. That's the reality. Go to Robinhood and say, I want my stock. Can you print it, certificate, send it to me? See what they're gonna say. Nobody have ever tried. That's the thing. Right?
No, I honestly, this happened to me sometime a long time ago. I bought some junk stock. Some guy talked to me on the phone, back then.
Oh, tell me about it, bro.
Call you and tell you blah blah blah. And I bought some junk stock, and some years later, this company merged and everything. I had forgotten about it. And one day, I got a call from the SEC, and they said, "You are on the ledger." And this company is now actually being merged into another company, and we need to deliver your stock. So they actually shipped me the physical stock certificates.
That's interesting. That's
very. I was like, okay, I guess there was something.
Thank you.
I can't do anything with it.
No. Usually they do it. They got their ways. Don't get me wrong, but still, while you're in the app, it's never moving. It's just a ledger, and that's it. Versus a tokenized stock, which you have actually a token that says you're the owner. Whoever has that token is the owner. So, for example, not like our very own Gabriel Haynes is going crazy now because David Hoffman, one of the host guys from the Bankless podcast, one of the biggest Ethereum podcasts in the space, he came out during this bear market and said that he is selling he sold his bag. And oh boy, this guy is not liking it. Check it out.
Don David, how will he get to $10,000 fucking dollars without a podcaster at the helm? God damn it! You shield me to Wall Street as the triple point acid, and then you leave us high and dry in the middle of the TradFi summer. You sold your fucking crypto pump. You sold your fucking heat. And now what are you gonna shill? Zcash! Zcash! No! God
Yeah,
damn it!
there you have it. That's our very own Gabriel Haynes going crazy because some people are actually selling their Ethereum. I personally bought more. Why? Because I don't know. I just, to me, it's so
I'm the
below
same
the
way.
200.
I'm the
No,
same
well,
way. It's like, why not?
to me it's the distance. To me, really, like, if I want to be real, is I saw this. Let me show you real quick. Let me pull it up. Let me connect. I saw this, right? And I'm looking 200 moving, 200 week. I'm on the weekly chart. When was the last time we were that far away below? You know what I'm saying?
Right.
So
Yeah.
I'm looking. This is when we first started counting, and right here, you're talking 2020. This is COVID crash. Okay, how fast we recover, and then what happened after? What happened right after? We were so boom. Look at that. Look at this. Boom. We up. Look at here. Even here, we went up.
Yeah.
So I look now, and we're so far away that to me it's like, no, this is the buy zone. Anything below 1600. So I bought it at 1550. I was able to fill an order. So I bought around here. Around here is when I bought it. I was able to buy a little bit more. Nothing crazy. Maybe like $1,000. Nothing to call home about. But it should be a nice 1 to 4, income ratio if it goes back to 4,000, right? If it goes back to 4,000, I should make like a 2.5x, something like that. I'll make some money. But same with Bitcoin. If everybody's tracking Bitcoin, we went to kiss the buy zone. We went to kiss it again right here. Kiss it right back up in the weekly. We got into the zone for the minute. No, that's not the one. Oh no, yeah, that's the 160. That's the one. So that was we went almost 59,000. Are we gonna get back in here? Possibly, because Michael Saylor just confessed to some things that got me thinking.
Well,
Check
Michael
this out.
Saylor's Ponzi is completely collapsing right now. Stretch, STRC is the ticker, which was supposed to be pegged to $100, is now below 83. It's sitting at like $82 right now. This is the stock, if you forgot, in which he pays 11.5% interest in cash, and it's pegged based on $100. Every time the stock goes over $100, Michael Saylor sells it in order to buy more Bitcoin. Unfortunately, the price of Bitcoin keeps fucking collapsing because of Michael Saylor, and now Stretch is completely, the price is imploding. Now, many people are wondering, well, why is it imploding? Why are all these people selling it? At $82, the effective yield is over 13%, which is what the market is expecting out of comparable assets right now. I'll tell you why. It's because a lot of people decided to tokenize Stretch and generate the yield on all their DeFi complicated bullshit, and that's how they end up generating the yield. Well, now with the price imploding, they need to sell Stretch in order to unwind all their positions.
They got to cover.
Basically, at this point in time, we're seeing the great unwind of Stretch. What are the consequences of this? Well, fucking Bitcoin's collapsing. Michael Saylor, you spent years buying Bitcoin only to generate a massive fucking loss and cause the entire crypto market to implode. You, sir, have fucked up. Your entire financial premise has completely unwound, and it's imploding before our eyes. And this asshole, this cocky motherfucker, has the balls to go out there and tweet about how he's had a positive return since he started buying Bitcoin. You're a liar. You should be arrested and thrown in jail.
All right, we're gonna have to bleep some of that if we don't want to get demonetized on YouTube. But you feel the sentiment, but it doesn't stop there. There is more, because shortly after Bitcoin came, Michael Saylor came out to speak in this
when we did
CoinDesk. With this CoinDesk girl.
Wow,
right?
so he reacted to it.
Bro, Check this out.
When we did Stretch, I designed all these with AI. I couldn't have done it myself. I literally sat and I used artificial intelligence and I went back and forth with the AI for a few hours. And
So you were just on ChatGPT, just like the rest of us, figuring out how to design these different offerings.
and arguing with it and saying, can I do this? Can I do that?
Oh
when we
my
did
God, my man. This is not made up. He actually said this.
He vibe traded.
So no, bro. He launched a public company. He created Stretch Strategy, and he got billions of dollars invested into the strategy.
Yes.
Strategy that he went to present. This is my strategy. Bitcoin strategy. Stretch. $100. We're gonna pay 11.5% dividends. Everybody's like 11%. On a stock that stays pegged to $100. Amazing. He designed the whole thing using ChatGPT. What? 3.5 back when he did it.
Or even
4 wasn't
before that.
around.
Yeah.
3.5 turbo, and he's arguing. So imagine. So because people right now watching this, you may be thinking, "Oh, he was speaking with Fable. He was speaking with Opus 4.0." No. GPT 3.5 is the best thing we had back then. And he was arguing with it back, and maybe the GPT is like, no, sir, you cannot do that. You're gonna place the money of millions of individuals at risk. And he's like, but can we do it though? Right? Make no mistakes.
You are correct. You can do it. You should do it.
Well,
And this is
you
why.
can do- no, or he says, but if we were to, in theory, do it, how we will do it? Well, in theory, right? As an hypothesis, we could do it that way, but you shouldn't. But we could, but you shouldn't. All right. Thank you, sir. He grabs the strategy, the math out. And now, bro, I can't believe he said it. One thing is doing, he said it like it came out of his mouth. What are you doing?
It comes out so naturally. Yeah, no, sure. I was arguing with it.
It's like nothing. Nothing is happening here. Nothing is happening. Oh, shit. Good luck. Well, guys, remember that this podcast is brought to you by the DeGen wallet. Your money on chain forever. Your bank does not want you to own your money. Think about that. They freeze accounts. They block transfers. They ask where your money came from. They charge you fees for the privilege of holding your own cash. And if they decide you are done, guess what, my man? You are done. But the DeGen wallet says no. No. The DeGen wallet is the bank of the decentralized generation. Your money on chain forever. One app, infinite possibilities. Swap any token across any chain, one tap. Stake your crypto and earn passive income while you sleep. Borrow against your stack without selling a single coin. Spend your crypto anywhere in the world with a debit card that auto converts at checkout. No seed phrases, no hardware wallets, no 17-step setup that makes you want to cry. Just your Face ID or your fingerprint. That is your key. Buy crypto with your credit card, sell it back to your bank, and the money moves both ways. No bank account required, no permission required. No one can freeze it, and no one can take it away because it's yours. Stop asking for permission and use your own money. Download the DeGen wallet today and join the decentralized generation. Description is on the link below. And before we leave, we get out of here, my man, I wanted to show you how to win in life. Basically, check this out. Let me pull it up. How to win in life. You need a certain level of stubbornness. I don't know how to say that words, but I know what it means.
Yeah.
You gotta be stubborn. It's not arrogance. It's not noise, it's stubbornness. The kind that keeps you showing up after disappointment. The kind that refuses to quit because people stopped clapping. The kind that says, I heard no, but I didn't hear God. Life will test your hunger, your faith, your discipline, and your patience. At some point, talent won't be enough. Motivation won't be enough. But you just have to keep going. And before we get out of here, my man, anything else you want to leave the audience with?
I think that, we are at a really interesting inflection point, right? That I think that we reached that point at which people are feeling insecure about their future. What is my life is going to, what is AI doing to my life? How is it going to change us? And I think that it's a good time to realize that every major revolution, whether it was the printing press, whether it was the locomotive, whatever revolution came that shaped the future ahead, eventually, yes, it took its toll on some people, but eventually it just became everyday. And whatever we are feeling today, it's going to become everyday pretty soon. And now it's happening even faster.
It's going to be normal, and we have become adapt to transition. We're used to change. It's just change is taking faster. As always, there are going to be some casualties. There are going to be some people that will not be able to adapt, just like it happened in every other revolution before us. But most people should and will be able to adapt, and hopefully in 10 years, we're going to be in a much better place than we are today. So thank you everybody for watching. This was another episode of this You're From the Future podcast. We're going to be here again next week. We apologize. We haven't been up for a couple of weeks. A lot of work, what we can say, but you rest assured that we stay on top of the news, and we're going to continue to bring the headlines that don't get much attention, but are equally important for you to stay on top of. Thank you for watching, and we'll see you on the next.